23. Oop, went down to 9. 18. Okay, we're gonna see 120.
Or under.
Zika can follow my lead in chat. $33. Welcome as everyone comes in. We're going to give it a couple of minutes for folks to join as the numbers trend up. And for those of you who have joined, if you want to go ahead and add your name and say a hello in chat, that would be great. Hey, Rachel, thanks for jumping in there and leading the way. And as we wait, San Diego is hosting one of their one of the first in the local area, first in a long time, space days at UCSD. I think they have a little bit of a bent towards space health or space research, biotech research in space, etc. Cool. I see a lot of familiar names. Okay. Yeah, thanks for doing that. So I'm going to get started. So hello, everyone. My name's Ellen Chang. I kind of posted, I'm currently at Capzone Impact Investments. It actually invests in infrastructure. So it doesn't invest in startups. On a personal level, I invest in a lot of startups and have been doing so since about 10 years now. So this will be a good conversation. All the folks that we have here have been in the industry for that amount of time. And so we can provide some perspective. Let me just set the scene a little bit, and then I'm going to go and have all the panelists introduce themselves. So what I've seen over the last few years is consistent space investment, but a trend towards a little bit more towards defense. You also have more mature investments. I think in 2025 so far, the volume has stayed as high as 2024. It's just that the stages of investment have been a little bit more on the kind of series B and C and possibly even D end. So there's still a lot of cash going into space tech investments. I think we have to explore, who's actually investing in seed and how these companies are growing. And given that there are different trends in the world here that are shifting focus, there's continues to be a lot of opportunity. If I were to look back over the last 10 years, the space investment scene has matured quite a bit. I think space investors generally know what they're investing in, whereas in 10 years ago, everyone was trying to feel out what the valuation would be, how long would the payback period be, would space investing actually become a thing, quote unquote. So with this as a scene, with this scene set, let me invite the panelists to introduce themselves. So Colleen, I'm going to start with you.
All right, thanks, Ellen. Hello, everybody. I'm Colleen McLeod Garner, and I currently work at a company called Paragon Space Development Corporation. Specializes for the last 30 plus years of keeping humans alive in space with water purification, spacesuits, thermal solutions, CO2 scrubbing, anything and everything that involves human factors and human-centered design. My background was not space. I was a businesswoman on the consumer product goods side for over 20 years. In the academic world, I have my MBA in global innovation, and I have an executive master's degree, really long title, in space leadership, business, and policy. And I'm currently working on my PhD at University of North Dakota for human factors in space. Happy to be here, Ellen. Thank you for the invitation. Excited to kick off this conversation with everybody.
Yeah, I invited Colleen because I met her at Johns Hopkins. The Johns Hopkins University in DC actually has a beautiful center, and they actually have a very strong space focus. And she has a lot of observations around the space investment, and she comes from an operating company. So I think it's good to get a different perspective. Over to you, Tom.
Yeah, hey, Ellen, thanks for the invite. So Tom Gillespie, I'm a partner and head of the Alliance Fund at Geodesic Capital. Um, I actually joined Geodesic just a few months ago. And prior to that, I was at Incutel, managing partner for the East Coast investment team and head of the deep tech practice for about 5 or 6 years there. And more relevant here is did a lot of space tech investing while there. So going back to about 2014 or so, ended up on about 25 or so space boards over the course of time as an observer, everything from launch vehicles to remote sensing to various components. At Geodesic, again, it's a brand new role for me. We're looking at early stage deep tech dual use, including space. So kind of right up the alley of what I was doing before at Incutel. Differences we can, in this case, lead rounds, write bigger checks. The LPs in this case are actually Japanese corporations primarily versus at Incutel, obviously it was Intel and defense agencies, but very much along the same lines as what I was doing in Incutel, just a different check size.
Thank you so much. I'll turn it over to Eric Lowe.
Mic check. I think you can hear me. Eric Lowe. I was most recently with Booz Allen. I was the head of space strategy there. I was there for 17 years. I guess relevant to this conversation is the fact that right before I departed earlier this month, I focused a lot of my time on business growth and transformation. And part of that involves building partnerships with space companies, commercial or commercial-like space companies, but also making investments into space startups. And so through Booz Allen's corporate venture fund, we made 3 investments into 3 separate space startups, those being Albedo, Starfish, and Quindar. Prior to that, I also did quite a bit of angel and syndicate investing, did some of that actually with Ellen. But another part that's relevant to this, and I know we'll talk about it during the panel, is how has things changed in the last 10 years? So without aging myself, I was involved with some of the early stage aerospace and defense startup accelerator back in 2014 and 15. And with Ellen being the lead for one of those startup Lightspeed accelerator. And I was there watching the birth of what is now very well known to be the organizations for investing, but also taking commercial tech into the DoD world, those being AppWorks, SpaceWorks, some of the Air Force or Space Force sponsor accelerators. I've been a mentor or judge for many of those. So hopefully those will be useful experience to add to this panel. Thanks.
Yeah, thanks, Eric. Yep. Goes back a long way. And Chris Kong, Paperjet Ventures.
Hi everyone, I'm Chris. I am an investor at Paperjet, focusing in industrial and AI at the earliest stage. In terms of, I've been investing for 5-6 years. Started when actually, I came from the software side. I was a product manager building products. But for space, that's always been have a soft spot in my heart. I was, growing up fan of watching Gundam, Star Wars, like most folks, but then became a student. When I started investing in space, I really truly studied the industry and start doing angel investing and syndicate. I think pivot point was investing in Auriga Space, where I get a chance to meet with Alan and all the lovely folks from the youth side, and then became, slowly trying to become partner. The other thing is I love doing mentoring, especially schools that produce, potential future founders that try to guide them to become startup ready and venture ready, especially in key areas like space and bringing them together. And then before that, I was a Wall Street banker for many, many years. And I have like a 10-year-old daughter that I put in a lot of those space related posters in her wall to prep her. Hopefully, you'll be able to see and do something like the space station that I've seen those the TV show Foundation. Thank you.
Thank you. As I look to prepare here, I have to state a script because we're going to send polls out to the audience to make sure we know who's out there. So as we get going, I'm going to go ahead and have probably a 30-minute to 35-minute conversation. For those of you in the audience, feel free to pop questions in the Q&A function, not in the chat, if you could. That way, we'll be monitoring and upvoting and downvoting some of the questions. So let me kick it off first, and I'm going to read from my notes. So space investing came on the scene about a decade ago. I guess from a commercial space investing, what I mean. I remember back in 2014, 2015, it was called New Space, and then it was Space 2.0, a variety of different names, and now it's just space investing. But it has matured tremendously so that in an average year in 2021 doesn't count, around $5 to $6 billion is invested in space by venture capital. You have all been part of this decade-long journey. How has space investing changed for you? I'm going to go through everyone. But maybe Tom, given that you have many board experiences, maybe you can start us off here.
Yeah, it's funny. I was thinking about, going back in the last decade. There was a meeting that we had about 10 years ago at one of the conferences where we tried to gather all the space investors that we knew were out there. And there weren't many of them. And we got in a room, and there's probably 15 of us. And it's all the names that you would recognize from like kind of early deals on, Black Sky, Spire, Rocket Lab, Planet, things like that. And that was kind of it. I mean, it was not a big set of investors. And, one thing that's very different now is just obviously the amount of interest, the amount of capital, and the roster of people that are interested in investing in some form of space. So completely different from that standpoint. And then I think the other thing I'd observe is that because you had these early companies, SpaceX obviously in the mix here too, is flash forward 10 years, all those places have produced the next generation of startups. So people are taking, spinning out of places like that, going to start their own thing. And it's leading to a number of great startups that have come from other places, from 7, 8, 10 years ago. So yeah, very different landscape than 10 years ago for sure.
That's interesting. What you just said resonates with me as well. There was very few folks. In fact, back then when I was meeting with some of the startups, I guess some of the startups, to them, it was a relief for them because I could actually understand what they were talking about. I had come from Northrop Grumman. We had a space practice. I actually knew what they were talking about. And today, I think there's a lot more folks or investors out there who understand the space and can have a conversation with a founder, which is good. I guess I'll pivot over to you, Eric.
I'll say 10 years ago, we certainly didn't have a lot of what you see today as defense only or dual use investors. The
That was actually a bad word back then.
Yeah, exactly, precisely. I think it was a taboo for large VCs to want to associate themselves with defense for a period of time. That has obviously changed over the years. And then to what Tom was saying, right? The SpaceX kind of created new economic value for a lot of the companies that were doing things downstream. So a lot of the Earth observation companies were popping up. A lot of components companies, like propulsion companies, were popping up, all with the idea of this being the golden age for space capabilities and space things that can be unlocking new economic value for other non-traditional industries like hedge funds like forest management, like logistics and shipping. I think looking back, those markets were immature. I would say some of them are still kind of immature. And 10 years, from that day, you see a lot of space companies that are focused on defense first. And I would say that's probably the big difference. And not to blame them for thinking that way when the administration is putting a lot of money behind DoD and intelligence space, putting money behind things like Golden Dome, which everyone's sort of rallying around. And so that's creating that behavior as well in the market today.
Interesting conversation there. I guess, Chris, over to you. You haven't been investing that long, but how has it changed for you?
Oh yeah, so in terms of the panelists, I probably have the least amount of experience, but I have seen like the kind of cycle over time, right? I started during the zero interest era, so there's a lot of abundance of enthusiasm or interest in space.
Explain the zero interest area.
A zero interest era, so like
era.
sort of like 6 years ago, where due to the kind of low cost of capital ability, if you have like a lot of liquidity, and a lot of folks during my time started investing away from, moving from public into private market, syndicate is like blowing up. So it's like in terms of accessibility, be able to invest in many different type of companies, including space companies. So during that time, hard tech and deep tech companies that's traditional is a little bit more into like a niche community. You have a brand new access to a lot of new kind of investors, at least on the small side, and there were a lot of companies that were able to raise just based on narrative and be able to so-called change the world. And then that kind of shifted, and as we kind of revert more to the different market cycle, then it's fundraising became harder. So now it's all about like capital efficiency, scalability, and many companies that able to display that, able to kind of move forward, and then shifted now to defense, right? Which a lot of folks can talk a lot about. But I also starting to see some signs in terms of because we're entering into the physical AI era, that there's a lot of focus on manufacturing, industrialization that has ties to the space industry, and you're starting to see like recently on the commercial side, with the whole data center in space, where you saw like Nvidia and Google partner with those companies. I think like Jeff Bezos just launched a new AI and manufacturing company after the success of Blue Origin. So I'm hoping to see a lot more, beyond just defense spending, and kind of diversified way in trying to really bring the industry forward with a whole new set of audience from the founder side to capital allocator side.
You have a good point. You see these large corporations come in. Bezos is going in again after Blue Origin. I would also say some of the business cases that never closed because of the AI era are starting to get investors interested in again. For example, we have this energy crisis, and all of a sudden, solar power from space is a thing. I forget what they call it. There's this fascinating astro electricity, I think it's what it's called. So people are actually trying to look at that right now. Colleen, over to you. Coming from the company lens, what have you seen? How has it changed for you?
Well, first of all, I mean, I think that one thing I always like to do is kind of learn from the past. And so when I look at kind of where, and I'm talking not just aerospace, but when we were doing Zeppelins, right? And how that evolved into the airline industry and how it parallels with what is happening in space. None of this is new. What I would say is that it is an extremely exciting time when we follow the money, right? Now we have 90 countries that have space capabilities. 14 of them have launch capabilities, right? You've got the US, the UK, France, Germany, all heavily investing more in defense than we've ever seen. So when you're talking about the space investing, it is always, if we can learn from what we've already done, none of this is new, right? we talk, and I agree with Eric, we were talking earlier regarding, dual use. And I know that he will speak to that probably today. Hopefully he will. But when you look at this and what we've done previously on, it always has, we started with defense. What we're lacking right now is sort of that Kennedy moment where the people, the populace, was invested into advancing space and looking at national pride and international prestige and national security and commercial applications and science and education. I mean, all of those things, they're starting to come to light again, which is extremely exciting as we look to grow out from obviously Golden Dome is like the main thing right now. We know that the biggest customer is the government. I think that will evolve. It will have to evolve if we continue to want to actually have redundancy and capabilities off world. I mean, that's purely what it is. And again, I urge anybody who is curious about what we've already done. It's just, just look back at what we've done. And again, it's just different now because the system of which you've got the superpowers, the middle powers, and the smaller powers. There's a little bit of a shift from what we were dealing with at the Cold War and what we're dealing with now, right? So I think it's indicative to look at geopolitics. I think it is important to remember these, the reasons why countries are doing what they're doing, and to really analyze that. It gives a better crystal ball if you're looking to invest and what to invest in.
Yeah, thanks for that. And given that you said more than 90 countries actually now have their space capability, what that really is saying is that the cost of space has plummeted dramatically. And that then opens up all kinds of new markets. And so that, sovereign capability can be had pretty quote unquote easily, which actually then complicates the environment yet once more. It's which is probably driving some of the investment in the national security domain, given that there's more space players out there. At first it was, we're concerned about space debris and we want to clean up space. And now we have potential shooting wars up in space potentially, right? So it is actually creating a more complex environment. Let me pivot to the second question, which is kind of an extension of this scene setting question, which is, well, then given where we are right now, what do you all think over the next 3 to 5 years, what the most exciting technologies or capabilities or investment areas are? Maybe I'll go right back to you, Colleen. I'll start with you. What is your company investing in, or
Yeah.
what do you think?
I mean, look, I want everybody out there that's listening to this, close your eyes for 5 seconds and think back to COVID and think back to 2020 and where you were. And then you can open your eyes and it's 2025. Does it feel like it's been 5 years? It doesn't. It is not that much time. And I think, when we look at everything from the Artemis, road mapping, to Mars with Elon's roadmap of 2030, all these things, it is a blink of an eye. And I'm excited, and I'm always going to be excited about anything to do with us really being responsible on how we address humanity. Meaning, it's not just about building the thing, it's about living in the thing. And and this is one of the reasons why I got into space, was the amount of discussion around humans was minimal. And we got to change that, because we can send robots all we want to Mars to set up shop, but we still need human capabilities. And anytime I talk about AI, I always I always encourage people to lean in as a tool and iterate, right? And I'm excited about really, a lot of the biomanufacturing that is happening. I'm excited about doing any sort of, space manufacturing as far as, are we getting those resources and using them in a smart way? I mean, really. So I don't know if I answered your question. There's like so many things that I'm excited about right now in the next 5 years, that I would encourage any of the investors that are out there to really widen the aperture, because it's not, satellites are not just the only game. And it was interesting, and I'll shut up after this, but Dan Golden did a webinar not too long ago. I think it was like yesterday or the day before, and had said, we're a single note band right now because we're focused on continuing to fix satellites and make them stronger. It's like we lowered the launch cost. Let's do some cool stuff. So again, you can tell I'm excited. I'm passionate about this industry, and I really want to see these broader conversations where we bring in a little bit more design thinking and a lot more creativity.
Yeah, hopefully we do that, and then figure out how to help and nudge investors into those risk areas, because they do have to take that risk. Eric, over to you.
I actually wrote to myself that it's just the time to talk about ODCs over the data centers. I'm actually
Sure, why
gonna,
not?
I'm actually gonna skip that. I actually want to talk about what excites me in the next 3 to 5 years. I actually want to see more space infrastructure, space for space-based consumers is what I mean, not for Earth-based consumers. So when it comes to infrastructure, I want to see ways to further lower the cost of not just launching, but operating in space and reusing things in space, to what Colleen is saying, right? So having regenerative power, and Ellen, you talked about space solar power being one of those, and there are a couple of startups out there doing that. Resiliency, reprogrammability, mobility, all these things are going to allow for space systems that are built for one purpose to be repurposed for something else. Things that are taking advantage of ISAM, in space servicing, assembly, and manufacturing, to repair aging systems. We're not quite there yet, but in situ materials reutilization is another one where I think, if we want to have a true space economy for space customers, that needs to happen. It might not be tomorrow, but I'll be very excited to see the next thing that comes to the market. I have a second thought on that. I also just want to see different space starts with different business models, as opposed to just building the next commoditized bus to launch into space, or the next great EO sensors for Earth observation. I want to see different business models fundamentally. Like, I've ran into companies that are doing drug discovery, zero-G manufacturing in space. Those actually excite me to take myself away from my defense past for a second. Space risk hedging and transfer of space risk using financial derivatives. That's something that's exciting to me. I want to see more of that, more diversification of the space market.
Two points. You said in situ capabilities, or in situ, probably possibly excavation. Remember that deep space industries and planetary resources.
Planetary resources.
Those companies went defunct, and now maybe it's time again. Maybe the technology has matured so that we can actually go do some of that. Maybe because our critical minerals, like our supply chain issues, we're going to go to space to go get some of the critical minerals. Who knows? And I do see like there's this one interesting company, Orbs, out there. They're Techstars graduate. They do like this interesting, like, small orb. I feel like it's like out of Hollywood, because they are actually collaborating with some Hollywood folks to build these orbs that can do some creative stuff in space, but it's also kind of like a Roomba for the space station, if you want to think about it. It's really fascinating, and the design is amazing. So I was talking back to you, Colleen, about design thinking, or design as actually a competitive advantage. I think they probably have some of that. Over to you, Tom. What do you think the next 3 to 5 years are going to be?
Yeah, I was going to pick up on a couple of themes here. One is just going back to Colleen's point about the number of nations that are interested in space, starting space agencies, for example. we had this list maybe 5 years ago of all of the companies that, all the countries rather, that had their own space agencies. It was pretty long. Admission statements, there were almost invariably somewhere between we're going there because we're interested commercially to we just kind of think it's interesting and we need a space agency. And I think that's changed. You think about geopolitically what's going on in the world, that emphasis has changed kind of across the board. And so I think as I look at the next 3 to 5 years, realistically, part of the story is going to be geopolitics, defense budgets. There's going to be a lot of money going into space, and it's not just going to be on the commercial side. It's going to be a lot going into the defense side and a lot on the sort of sovereign, build out of different capabilities. So that's one point. In terms of just areas of interest, I think we haven't talked much about Starship, but just in general, the cost of launch going down. There's going to be so much, once that comes online and others as well, there's going to be so much that can be done that, wasn't possible before in terms of just bringing infrastructure up there, creating new business models. You can, I think to Eric's point, it's space for space's sake. There's a lot that you can do that you really couldn't even think about from a business model standpoint a couple of years ago. So I think that's going to be important. Areas of interest to me, a lot of different ones, but just I'd say generically dynamic space operations, moving things around, operating up there, that ecosystem is going to be important. Commercially, it's going to be important from a defense standpoint. And so I think about just on-orbit logistics of what's going on is one answer. Reusability in general is a good theme. And just autonomy as a service, I think is going to be interesting. So.
Yeah, to double down on your point, I mean, the commercial space stations should be online come like 3 to 5 years, right? Like the ISS has to sunset, Axiom Space is over there. You got, Blue Origin doing their bit. I think what's interesting is they should be getting to the point where they're ready to like accept other things showing up on their on their space station, which it should be interesting. Over to you, Chris.
I probably echo some of the points, but I would say that yeah, if you say 3 to 5 years, definitely on the infrastructure, both in terms of data and the physical infrastructure, right? But I would also argue that it kind of makes sense to sort of cross-pollinate to what's happening on Earth right now. To for example, helping to standardize data allows you to open up, or the like digital twin, synthetic data, physics model that can really allow company to de-risk, but also open up to different kind of business model as echoed by the group. In terms of from the like physical infrastructure layer, definitely robotics is a big thing right now, and any kind of service on the orbit itself. I would feel like if there's the opportunity where you can sort of cross-pollinate, you really open up the addressable market. You really can drive the cost down significantly in terms of things you do in space, and then that will open up the next wave, right? Which is anything from in-space manufacturing that relies on all those costs to where economically it makes sense to attract other new commercial players, but also like energy, communication, and that's what I like to see, especially since let's face it, any kind of investment in space gonna take more than 10 years to happen, right? You need to attract all sorts of new different kind of capital from investors group, and the way the market is shaping up right now, it's like most of the money is multi-stage, multi-growth. So I don't think like if you necessarily just attract a space-specific or defense-specific focus is good enough. If you want to kind of realize all the potential of the addressable market, you need to be able to have a strong commercial focus and appeal to different industries.
That's a good reminder. Despite the defense side opening up, there's strong need for dual use or dual focus, which takes us to this other question, or the third question. To the investors here, how do you evaluate that longer term payback cycle? Like, what are the technical and market risks? I think for me, it's a little bit different 10 years later. A lot of the technologies have matured, and maybe it's a lot of the visions that were out there 10 years ago is less pie in the sky, but I still think there's a long horizon that's really hard for funds to actually reconcile with. So I want to kind of talk to all you investors here. So maybe Tom, starting with you.
Yeah, I think one thing that's different from maybe 10 years ago is this may be a theme here, but the level of government funding out there that's around for, even startups is much higher than it used to be. And so, yeah, you've got business models that require a lot of capital, but you don't have to fund that completely with, venture and PE money ultimately. So I think that's one thing that helps a little bit. I think we have a better sense, compared to 10 years ago, of like what's going to work and what isn't. So to your point, Alan, you go back to that time and a lot of it was like, hey, we'll invest in this because it sounds kind of cool and we don't know where it's going to go, but count me in. And now we have much more of a sense of who the real customers are out there, both commercially and in government, and realistically how something might play out on the company side. So I think we have more information than we had back then.
Chris?
Yeah, same thing, right? I definitely like lesson learned from investing in deep tech. While there's like a lot of interest from the defense side, a lot of times you don't want to have a single customer, single market, where that if you bet everything, it doesn't work out. Which that's the lesson that I learned, right? To be able to kind of manage that diversification a little bit, show that there's a market pool, at least on the commercial side, really helps a lot to alleviate some of the concern from the general investors. But also think about, how do you manage your supply chain? How do you manage the hardware, right? Using simulation, using platform style, to manage some of those hardware risks. I look for those type of questions. Like one of my favorite questions to ask if the funding market gets cut off, in the next 6 to 12 months, what's your plan B? How do you mitigate that risk? Just to see how founders, are prepared for those kind of situations.
Yeah, good point. Eric, over to you.
I think I might agree with Tom here. I think compared to 5 or 10 years ago, we definitely have a lot more government funding mechanisms in the way of Tech 5, Strat 5, in the way of more robust SBIR programs, and other things like that are helping to financially prop up the companies, even if they have a multi-year development cycle. And as I mentioned earlier, there are a lot more defense-focused or defense-driven investors in the market now, to where I'm seeing the rounds of these startups are raising today are pretty big compared to 10 years ago. Endurosat just raised $104 million. Apex just raised 2 rounds of $200 million. So I think the capital injection into the market is alleviating the problem and the risk somewhat. But I question, whether some of the basic business fundamentals are still practiced, whether you're doing a space startup or just any other startup. By that I mean, if you know that you have a long development cycle, can you develop intermediate capabilities, products, solutions to offer to someone who's willing to pay $1? Like Cislunar industry is pretty good at it. Like 5 years ago, they probably would say that they are in the business of in situ metal repurposing. Right now, they're selling power amplifiers and converters, but then they have customers. So they are building that into their rather long roadmap and waiting for the market to evolve. But at the same time, they are making money. They're having cash flow to keep their startup alive. And that's what I mean by like following this fundamental business for startups. Like go and think about how to get the first dollar. Go and think about how to just like don't die as a startup. And do you truly know who your customers are? Not to turn this into a postmortem for some of the companies that didn't survive from 10 years ago when they were talking about, oh yeah, we're going to unlock the ability for companies to use space data for financial trading. Have you actually talked to the financial investors, the hedge fund managers, people on the floor to know how they're going to use the data, if they're going to use the data? That seems to be missing. And so following good, sound business fundamentals for building and growing a startup and then just looking for more and more capital that is coming into the market.
I have a couple things to add to the conversation, which is when I've seen a couple funds extend their period. So I think Steve Jurvetson now has a 15-year fund, and so that kind of allows for a little bit longer time horizon. And I think what Seraphim went, I don't know what they did in Europe, in UK, but basically it's an evergreen fund instead of having an actual termination time. And I think that's maybe allows them a little bit more leeway to take longer term risk. What's interesting to me on the, I work with a lot of startups across different domains. What some of the drone companies have done and some of the maritime companies have done, given that there is a defense market, as they've gone to different countries and actually started to sell commercially, direct commercial sales. And I haven't really seen our space companies do that. And I feel like there's an unlock there that could be had. Yes, there's some ITAR stuff, but there's still conversations to be had via our government. And then a third thing I've heard this morning is that, if anybody of you are in defense, you know that we actually approved the E7 Wedgetail, and that was for some European, basically Boeing can build that, and I think it's for Europe. I might be wrong. But short story is, I think we are not going to be investing in airborne early warning anymore for the US. And the comment is that the US has space capability, small, Planet and all these small sat providers, and also geo providers. But the reality is that Europe seems to be missing that, and possibly Asia, our Asian partners seem to be missing that. So there might be some opportunity for the space community to actually provide airborne early warning capability from space. So just some people might want to take a look at that and see if that's an opportunity. I'm going to go back to the last question and then open it up to the audience. There are some questions that have come in, but short question: what role do you see government contracts and regulations play, or how will government be different? I mean, we have this StratFi, we have basically the Space Force and SpaceWorks. Do you guys, given Hegseth's comments on Friday, do you see any change that might stimulate the market? I guess, Eric, I'll go back to you and then go to Chris and Tom and Colleen.
I guess the answer is probably too early to tell, but it's trending probably yes in attracting newer entrants into the market. I think this administration is very adamant about looking beyond the traditional primes to really try and once and for all diversify the playing field for system development. And so with that as the North Star for this overall administration and the direction that it is trying to go across the board, I really think it will be an opportunity for certain areas, maybe not all areas. I know civil space probably gonna hurt in the next 3 years, to have more direct engagement and direct delivery of smaller, niche, but capable and agile companies delivering solutions directly to the government as opposed to through a prime.
Chris,
I don't know what the specifics are.
Okay. Chris, over to you. Any comments? I know you have less government experience, but what are your thoughts?
Probably not, but I would also think of the government as the anchor customer, not the sole customers, but we have the ability to pull in all sorts of commercial plays into market. And that really helps, I think, startups to, de-risk a little bit in terms of a market development. The other things I would love to see is a little bit from regulation side or compliance, be able to have less friction for founders so they can focusing more on building as opposed to trying to navigate through the complexity and ambiguity dealing with on the compliance side, and hopefully some kind of standardization on both areas, right? Standardization allows you to build an ecosystem. Ecosystem allows you to pull in all sorts of different kind of innovation into the industry. You can move fast and you build and have like a very complex layer, just like what we see in the software side. Specifically, I would say like on the data side, I would love to, because I've been participating in some of those kind of like NASA discussion. We have an abundance of data, but we need to turn that into actionable output that can really unlock certain things, being able to standardize them, be able to, work with all the kind of regulation around that is the right start.
Gotcha. I guess, Tom, any comments?
Yeah, I'd say a couple things. One is on on the acquisition reforms announced last week. I think we'll see how they play out, but I think they're trying to do the right thing. And, I think they're trying to paint more of a demand signal, which is something that the market's been asking for a while. Like, you invested in these startups, how do you know kind of what the market looks like down the line? And I think there's an intent to try and change that and make that more transparent. And then change the culture. Like, I think of remote sensing companies over the years, it's been very difficult for them to break through. And that's partially because there's an entrenched culture where, the people who buy don't really want to buy commercial because it's pretty unfamiliar. But now hopefully it's going to force the issue a little bit. I think that's all good. The broader question, I think, is on, how does government kind of play in the next 3 or 5 years? And from my standpoint, it's going to continue to drive a lot of the market here in space. So, we'll see new programs. We'll see programs across a bunch of different countries. One question is, how does that play out in terms of, can American companies still sell broadly to Europe, or are they going to look for their own capabilities? That's TBD as well. But as a whole, the government market is going to be, pretty robust in the next 3 to 5 years and pretty meaningful for the space sector.
Yeah, I guess. Good point. So Colleen, over to you.
Yeah, I would agree with, the gentleman's comments so far. I would add, FAA also want to play ball and help with the with the a timeline, right, with regulations and for launch. And I would actually, again, step back and just say, can we look at this in a little bit more of an efficient way? And you're going to hear it right here, but let's put together a Department of Space and have it as an actual entity so we can get rid of redundancies and miscommunication and overlap that, needlessly. And also to make sure that, hey, a lot of let's be honest, a lot of the regulation and policy that we need, we don't even know if we need it yet. We don't even know the gaps. We're still trying to figure out what needs to be written, for basic things like, space rescue and, who do you call for X? And I mean, there's a lot that we need to work on together, to solve these things. But, I think that, certainly, and you go back to Tom's point too, with, commercial was actually a really dirty word even within NASA until Lori Garver came along and said, hey, we need commercial partners. And guess what? We showed them. We showed it. You didn't need a cost plus contract. That you just needed someone that had a dream and was willing to give everything to get it. And I think that that's part of what I don't want to lose in the space industry is that passion. Is that gem of inspiration, and keeping that right, because again, all of us are doing these. Like, I mean, seriously, like, think about it. We're talking about space right now. I mean, it's pretty incredible, and I don't ever want to lose that part of it. But I do think, thinking about it responsibly, we need to look at, and be honest about the gaps that are there. And I think certainly with, the other part of that is understanding the policy and the regulations as they are now and the laws that exist now, and how do we do better, and iterate from there.
Yeah, so I'm going to go into the Q&A right now, and I guess anybody just raise your hands if you want to answer or just jump in there. There's a lot of them, and we have only 10 minutes ish. So one question is, what are our thoughts on investment in U.S. government funded companies taking in money directly or through funds from foreign investors, i.e. sovereign wealth funds, funds outside of the Five Eyes? What do you guys think about that? Does that help or hinder progress if you're here in the US?
I'll jump in there real
Go ahead.
quick. I mean, it does not hinder. I mean, I think you just need to kind of understand who you're negotiating with and the partnerships with collaboration. But I mean, I'll use the ISS as a great example. I mean, it was the most incredible thing that we've ever done, holding hands across nations, across the globe, to create something that humanity is our greatest accomplishment as far as technological advancement. So I welcome every voice at the table from every country. I mean, that's why we started putting together the Artemis Accords in the first place, to bring all these capabilities. I mean, you know, I think India is a great example, right? India, as a superpower coming in, I think it only helps. I just think that we need to know who we're at the negotiating table with.
Yeah, I'll add to that. I now have my Incatel hat on, but you know, as you take in foreign investment, any foreign investment, regardless of where it's from, is a complicating factor. And then it becomes a bit of degrees. Like if it's from Canada, you probably don't care that much. If it's from other places, down the line, it introduces more and more complications. And it also matters how much you take from a percentage standpoint. So there's a whole obviously Sisyphus process of as people invest in these companies, you got to go through some hurdles to get things approved. So, that's definitely consideration. I'd also say on the government side, you have a really wide variety in terms of, who cares more about foreign investment. So some elements of the government really don't care that much, and some care intensely, even if it's, Five Eyes investment. So it really depends on who you're trying to sell to as well.
All right, moving on to the next one. I'm the co-founder and CTO of Dacon Technologies. For startups exploring neuromorphic and AI-enabled technologies for future space systems, what should we understand about positioning ourselves for investment and strategic partnerships? Anybody want to take that? What neuromorphic and AI-enabled technologies?
I guess it depends on what those technologies enable and what is the business case that is trying to solve. If you're trying to develop, like say, an AI chip that's red hard and can be put on a satellite that's not using that much power, that is going to give someone that's going to have a very different answer than you're trying to use that to go and do computation of data for space domain awareness or some other space application. So it kind of depends on where the question is coming from.
I think what I'm hearing is, what's that business case and how do you position yourself to actually solving a market problem? I mean, I think technology development and being creative is very, very, very important, but how do you actually translate that to the investor mindset? Many of who are also technical, it's just that they also have to be concerned about the market. And I would say from an investor perspective, it's terrible to be too early, I mentioned. And so as a startup founder, you might want to think about the timing of everything too. That might be in the investor's mind. I'm going to move on. I love the comments about developing space infrastructure, but from a commercial company's perspective, it's super challenging to convince investors to take on the risk given heavy capital requirements, time horizons, and overall uncertainty. Could you share any insight on how you would approach this and what you would focus on? How do you position it if you're raising money?
I can try to answer that a little bit, right? I would look at in terms of a dual market, what's happening in the current market in planet that can help reduce that cost of building over time, from robotics, manufacturing, automation, and so forth. But infrastructure is such a very broad term. There are so many different companies working on different components. So look into educate investors via pitching on who are the key players in the ecosystem, how do you plan to work through the partnerships, and how do you kind of de-risk from a cost and also execution point of view. And I think beyond that, there's also always ways where I would love to see the ability to generate incremental revenue before it's fully deploy. So yeah, those are some of the key things I would look for if you're thinking about space infrastructure, thinking in terms of milestone and de-risking.
Yeah. Okay. Elaborating on Tom's point, startups building dual use products run into the challenge of being caught in ITAR if the products are specifically designed with Department of War funding, which limits commercial and global reach. So there's a little bit of a dilemma. How can startups navigate this? How do you build ITAR free? I think that's the question. Any comments?
Yeah, good question. So yeah, I think one answer is you have to your point, Ellen, know kind of what the restrictions are, like what's EAR, what's ITAR, what category is something going to fall in. And when you take on money, what restrictions come with that. In my experience, even DoD and some IC funding doesn't come in and force you into a certain bucket. You like I think for the most part, and at least in my experience in Incatel, you'd see things that we're not going to paint you in a corner where you could not sell absolutely anywhere else. But you should ask those questions up front before taking development funding.
I do know
I'm
of.
gonna add to that.
Oh, go ahead.
I agree with that, and I would urge any of the entrepreneurs out there to really. There's a regulatory boot camp. It's once a year. You learn everything you need. It's a bit of a lot of stuff, but you got to know it. And I remember the very first year they did it, and I wanted to go because I was curious. And a lot of the entrepreneurs they just didn't know, right? And I would also say that I understand that you love your widget a lot, and it's the best thing ever, and you want money from wherever you can get it. But you really, really, again, you have to be diligent on knowing who you're getting in bed with, because you could get a knock at the door from somebody you don't want to get a knock at the door from to say you violated this stuff. So you just really have to do your due diligence on your side, despite the funding. And I say not just for entrepreneurs, but like there are a lot of companies that there's like funding that's coming from sources that may be a shell company coming from somebody else. I mean, there's plenty of instances of that. So I would just say be diligent, do your homework. Despite really wanting to get that funding, it's not worth it in the end.
Just to add really quickly to that, I think Colleen's right. Like I've seen more danger from people taking investment money that they didn't really know where it was from. It could have been, it looks like one thing, but it's really another. I've seen that become more of a problem in terms of sales than I have the US government, at least, painting a company in a corner and saying you can't export anything. It's much more around, hey, you took this money, but it wasn't really where you thought it was from. And now you got somebody in your cap table that owns 20% of your company, and we can't engage with you as US government.
What I do know is some of the companies go in with some design concepts up front and start having conversations with the regulatory agencies up front. So yeah, the boot camp idea, I think that's out of New Mexico. They run that. So we can get that out to the audience. And just to know, then you can actually, because you're creative, because you're engineers, you actually can figure out how to design it appropriately so that you possibly have, an ITAR-free version. Apparently, our regulations aren't as bad as those in Europe because I just recently met 2 German companies coming here to locate just so that they can get out of their ITAR, which is, I was like, you're coming to the US to build to get out of your ITAR? You're going to have that. Apparently, they're worse over in Europe. We'll end at a fun note. So how do we collaborate on a global level as far as space infrastructure? Anybody want to put some last minute comments out there?
I want to go to Titan. I'm just going to throw that out there. There's no talk after Mars yet. And I'd really love to explore going to Titan. So if anybody is interested in that, I think it would be great. I like to think a little bit further out than Mars. So yeah.
I think NASA, we haven't really mentioned NASA, and NASA doesn't have a head yet, but that's really their function, right? Like they basically Space for Humanity and like do the ISS or, the Artemis Accords. I think we double down on that. And yes, we're going to have competimates and near peer countries being part of that potentially, but that might actually keep the dialogue open, which is super important rather than us getting into the corners of our world. Okay, with that, thank you all for joining us. It was a great conversation. I think it went super fast. We'll be sending out this podcast. It's not a podcast, webinar out to everyone. Feel free to follow up with us and we look forward to seeing you next time. Thank you so much. Talk to you soon.
Thank you.
Bye, everybody.